Hey, what's going on, Sat Nation? Happy weekend to everybody. I hope you all had a great weekend, got well rested, and just ready to kick off this week. If you're in Europe or you're in Asia, then your Monday already started, and I hope it was a beautiful day for you all. Let's get into it. First of all, this is going to be a financial market overview for tomorrow. It is not financial advice, it is just for educational purposes. You are responsible for what you do with this information. What you see on your screen is SPY on the weekly time frame, and you're gonna see some indicators, right? Right here, what you see in the middle or the thick of the price action is called the EMA clouds, right? It's just a graphical representation of the 921 and 34 EMA, right? Nothing new, nothing different than what you all may have been accustomed to. It's just a different visual representation. You're also going to see this teal line and the yellow line. These are the 50-day, which is the teal line, and the 200-day moving average, which is the yellow line. We are on the weekly time frame, and I'm going to draw some patterns that we have seen before, and it's nothing new. So we have the normal head and shoulders pattern that we've been looking at for a while now, right? We can say that's their head and shoulders right here, or inverse head and shoulders. We also can say we have a rounded bottom, or aka the cup and handle, right? Here's the cup, and here's our handle, right? And what that means is that on a longer time frame, we're looking for a bearish or bullish movement upwards, right? We're looking for a break of that 460 zone and to go for the all-time highs. So that's on a larger time frame. So that's not something necessarily that would be of use right now because where price is in the consolidation market balance for you to day trade it. Now it would be more beneficial for a swing trade or a longer equity trade or even a leap, right? Something that you're looking for long term with time on it, right? The other thing to note is that it was a inside week, right? So we had an inside week. Like I said, this is the weekly time frame. You can see that this was an inside week. The price was contained within the previous week. So we have a one bar, inside bar, right? Which according to the strat, it's one. Previous week was a two up. This is one. So going to this week, we have a 2-1-2 setup on the weekly time frame, right? That is something that we're gonna look for. This is also a bear Sharami, if you want to call that. Um, but let's go into the daily time frame now. So you can see that on the daily time frame, we had a failed two up, meaning that we took out Thursday's high, but it failed to continue and eventually actually started coming down, turning into almost an inverted hammer. So it's a failed two up, and price closed below the 21 EMA and EMA, right? So it was a failed two up. So the daily setup for tomorrow is actually a 222 potential reversal to the downside. Bearish Randy Jackson, right? We're looking for it to take out Friday's low and then potentially continue forward. If everything was ideal, we would take out Thursday's low, right? Don't know if that's gonna happen yet. We would have to see what futures does tonight to make a better analysis. But if we do break it to the downside, that would count as a two, right? As long as it breaks Friday's low, it counts as a two. It can just break it by a penny and then reverse. It still counts as a two down. Just want to get that out there. I know that it's confusing for a lot of people that are new to the strat because you think that once it makes the two down, that there's a further continuation and whatnot, but that is not necessarily the case, right? It just means that we have taken out the low of the previous candle, right? Now that we have all the other good information on here, we have the high, the lows for the monthly, weekly, and daily, and along with 50%. So you can see that. You can pause your screen and mark these off. I'm zooming in a little bit more because we're not going to be so concerned with the monthly high and low because they're so far apart, right? 457 and 433. Not hitting that tomorrow because that would be an FOMC kind of move where we move 12 to 14 points in one day. And that's a massive move. Even when you see these big candles here, this is 442 on August 29th, and we made it up to 449. And that's a huge candle. That was only 7 points, right? So to make a double that movement would be out of this world, right? Where like I don't see that anywhere, right? Just not really realistic, right? Even here, right? This is at 433. We went up to 444, right? 11 points, right? So, but you get the picture, right? So anyway, I'm gonna zoom in so that you can see this critical information that you probably gonna be looking for going to tomorrow. Let me see if okay, yeah, right there. So we have the weekly high, the daily high, 50% week, 50% of the month, or the day, 50% month, day low, week low, and then I said swing low from May 29, August 29, right? Because that's essentially going to be our next low target if we are looking for a swing to the downside. Um, Other thing to note is that we broke out this rising wedge pattern on the 1st of September, and now essentially we are in this downward trend channel. Let's go to a smaller time frame and see what we see, right? So we are in this wedge right now, right? We have this wedge going on, and a lot of people are still potentially probably looking at this, right? They're still probably trying to play this downward falling wedge, right? So potentially we can break up, right? We might, since we came up on Friday and we failed and it's starting to come back down, we might be looking for it to take out the pre-market lows of Fridays and potentially even Thursday's open low, and then come back down, hit the swing low or the weekly low, and then make that move up. So that's something to keep note of. Like I said, on a larger time frame, we see these bullish patterns. On the smaller time frames, we are seeing a potential right here. Right, we can say that this might be a inverse head and shoulders, maybe even cup and handle. And then the other thing to look at is this, right? We even can say that we have a inverted cup and handle right here. Look, right? So it really is going to be depending on what we're looking at and how we're looking at it and almost what we want to see. But the point is to keep these in mind, because then we can say, look, on a smaller time frame, shorter time frame, we have from Tuesday, August 29th until Friday, we have this inverted cup and handle, right? So potentially, and that would play along in alignment with the longer time frame of the inverse head and shoulders and the cup and handle, because that means that we're looking for that pullback, finding a support area, a demand area where all the bids are, and then make that movement up for that bullish break on those patterns. So this would be in alignment with it, right? So you see how it kind of all connects a little bit now and whatnot. And if you were a person to just trade Friday's action, you can say, look, there's a little mini inverted cup and handle here as well, right? Or most people are probably looking at this, right? It's just things we want to be conscious and aware of, right? We can say that we have this, right, and come down and eventually break to the upside. But like I said, we have a 212 set up on the weekly. We have a 222 down on the daily. So we are potentially looking for a down move between now and tomorrow's New York session. And the reason why is because, we came up and we failed to continue further up, right? So now we're looking for, back where the algorithms are going to start looking for the next low or where the next stops are. And it would be Friday's low. And if you take that out, then we have pre-market lows, and then we have Thursday's low. That's just how the price works. It gets attracted to where the potential stops and liquidity zones are. Now that we have this, I want to jump to, another thing. We also have a gap to the top side right here. There's a small gap here that was created in pre-market between Tuesday and Wednesdays. And then we also have that bigger gap that was created way back when, I think the beginning of August, that we did not fill. We tapped it a little bit and then we came back down. The other thing to note is that we're going to look at Apple real quick. And the reason why we're looking at Apple is because Apple is part of the SPY and QQQ ETF. And it's very important about this, right? Because what it does will impact the movement of these two ETFs, especially triple Qs, right? Because QQQ, Apple's worth about 12 or 13%. It's weighted 12 or 13%. And for SPY, it's weighted about 6 to 7%. So what it does will impact it. What we want to look at is the fact that, first of all, we have several gaps, right? We have a gap to the downside. And we have two gaps to the upside. The other thing to look at is, we are well overextended against the clouds. That's why when we came down Thursday, the drop, Friday started pulling back up, and eventually, obviously, it came back down. And it turned into a bearish inverted hammer. And this was most likely due to the whole news that China was banning all government officials and workers from using the iPhone, right? I think they're trying to gear towards using their own brand, which is, I think, Huawei, right? The other thing to note is the clouds are starting to flip on Apple, right? Starting to flip bearish on the daily time frame. Again, we are looking for a potential down on Apple as well because of just where price is at, right? I know that might conflict with the fact that we're overextended from the EMA clouds and we're looking for a move up. We are still looking for a move up, don't get me wrong, and we have a gap. But just based on the way the price closed on Friday, we are potentially looking for a continuation down of Friday's close into Monday's open. If we look at the weekly time frame, we can see that it was almost actually it was an outside bar, right? It was bearish engulfing, and look, it stopped right at the 34 EMA, right? So we may be looking for a 3-2 down tomorrow or a 3-1 consolidation week for Apple. But if Apple does move down tomorrow, then we will see and expect that SPY will move down. That's the reason why it's important to look at Apple, Microsoft, Google, Amazon, because they are part of the SPY and Triple Q's ETF. But this is something I want to keep note of. If we do have a continuation down and we're able to push lower, we might hit this gap. That's what I think that's what the market sentiment is right now. A lot of people are expecting a potential gap attempt into Apple. And this, honestly, if we do hit this, would be a good area to potentially go long into 2024, not long into the end of the year. It really depends on when we hit this, right? If we hit this within the next week or two, then I would say longer expiration, right? If we hit this closer toward, I would say, the holidays like Thanksgiving and Christmas, then you can get a shorter term expiration for a long, right? If this fails to hold, obviously, then the next area would probably be the 140 to 150 zone, because that's where this big consolidation is. But I watch it for the 200-day moving at first, acts as some kind of support, and if it fails, then we go down further. But the whole point of looking at Apple this week is that, look, it is in alignment with SPY, expecting a potential move down, which would continue to bring SPY down. So, look, we can go to futures right now and kind of look at what it's doing, and then we can make it further gauge from there, right? So I already have SPY and everything marked out as well. Or not SPY, ES. ES is the symbols future. So right now, tonight's open, we actually opened down and then came back up. And it came back to right about flat. So it's consolidating right now, right? So like I said, if ES can move below its 50% on Friday, then there's a good opportunity that we're going to take out the lows and then eventually go for that swing low and the weekly low. And then make that 2 down for the day. So that's just something to keep your mind on and eye on. But that is what I'm looking for going to tomorrow. Obviously, this is a light week in terms of economic data. We can look that there's not much going on Monday from the U.S. perspective, nor Tuesday. We have crude oil stocks after our regular New York session closes. But then Wednesday we have core inflation, right? CPI. That's the big day. Wednesday on is when we start getting volatility, right? And we have PPI on Thursday. We have industrials at 10 a.m. And then Friday is, the import and export, right? The really big kicker is really going to be not this coming week, but the subsequent week after that. And the reason why is because we have FOMC on Wednesday, right? So this is where Jerome Powell is going to determine what we have for the remainder of the year. If we're going to stay flat or are we going to have a final rate hike, right? So this is a big week on the what week is that? The 18th week, right? This coming week we are having our CPI, PPI setting us up for next week, and then the following week we have pretty much FOMC, and I think usually with FOMC there's PCI or PCE and whatnot. Let's see, right? Let's see, jobless claims and then manufacturing retail. So okay, now just FOMC on the subsequent week, but something to keep in mind of, right? So again, not much in terms of tomorrow and Tuesday, so you should be ready to chill. And then I showed you the earnings, right? All this information is on my Twitter, right? If you follow me, you'll get it. I tweet it out every weekend what is the key economic data along with earnings in the coming weeks. And then I usually give you all a detailed analysis in a 2 or 3 prong attack with a overview of the charts and what it's doing. And then the day of trading, I usually give you a game plan analytics with more details on a micro level so that we can see what our key levels are for day trading. And if you want to swing trade, we have our levels already. Nonetheless, thank you, boys and girls, families. Please like, subscribe, hit the notification button on both YouTube and Twitter, and look forward to talking to you later. Thank you. Bye.